Hi, Christine.
Hello, you had some computer trouble, huh?
I really did. I turned this thing on about quarter to 12, and it was in a loop, a blank screen with a circle
Oh,
going around, and it wouldn't let me turn the machine off, unplugging it. And then Cornelia gave me a tip I should have remembered. I held the on button down for about 30 seconds and then released it. And then I got on, but then it said it had some updates to do. And that took about 5 minutes. So I could have made it on time, huh? It's
oh.
just it's just me and you, huh?
Is it people probably just kind of dropped out, but I was like, well, just I looked, I'm like, there's got to be somebody that says something. And I saw
Yeah,
that Cornelia sent a message out. So
yeah. Okay, let me just move over to the library here. Oh boy, I tell you, it's a jungle out there, Christine. I tell you.
oh, I'm telling you, I get it.
Okay,
Well, take your time. I'm in no rush.
yeah, and hopefully we'll get a few more people arriving here. But we get, I,
Yeah.
I gave them the perfect excuse. Okay, so the first thing I need to do is call up the famous PowerPoints. Let me put this aside. Let me get this out of the way here.
Hey, you know what? Can I ask you a question while you're just
Sure.
getting ready? It's
Yeah.
just something. Okay, I want to do the 2:30 in the fall.
Yeah.
But I'm wondering, like, okay, because the summer is so condensed, is it, you have to budget about 20 hours a week at least. I'm wondering how much time I would need to budget for the 2:30 class.
Well, what does Cornelia recommend? Did you see that already?
No, I didn't look, I didn't,
A couple hours a day, I would say for sure.
yeah. I just
20,
like with work, I'm trying to figure out if I can do it,
between the tutoring help and going to class and keeping up with the studies, 20 hours seems a bit excessive to me. That's 3 hours a day. But, I know you'll do what you need to do. Huh?
Right, right. Well, and this time I can do it because I do some taxes. I do taxes for,
Right,
I help people, to do taxes on LaCert.
right.
So, yeah, so I don't want to like not have enough time to do that. So I thought, well, I better ask.
Yeah. It is a commitment in time for sure.
Yeah, I know I want to do it though. So,
Well, the first few weeks of 2:30 shouldn't be too tough for you. They add a little bit on top of what we're doing here. And then when you get to chapter 6, that's when all the new stuff begins. But some of it you're going to learn here,
oh, that's cool.
like bank reconciliations. They just go
Right.
into them a little more different.
Yeah, I like it. I'm really interested.
That's good. I think I'm teaching that in the fall, right?
Yeah, I think so. Well, you know what? You're listed because I have to do the online class because my daughter's in school and she has special needs. So you're listed on an online class. I don't know if you're gonna do it.
Well, I'm gonna be in the classroom. The way it's supposed to work, as I understand it, is I'm going to be in the classroom for one of the days, but also videoing, just like I'm doing now. And
That's
then
so cool,
we'll see how it works out. We're all kind of learning together.
right? It's helpful for me, I'll tell you.
A lot. The world economy has changed a great deal now in terms of expectations of what workers are going to do after the pandemic. Some
True.
want some want to work at home. Some employers have found out they don't need as many people as they thought.
Very true.
Some employers realize that having people working at home is actually a boon to their business.
Yeah.
Here we hold on 1 second.
Something good are coming out of all this bad.
Yeah, and it was also unnecessary too. Just
So,
ridiculous.
right? There was a lot of unnecessary.
Just don't get me started on.
Yeah, I'm right there with you, Bob.
Yeah.
Oh,
Oh, it's gonna go away like magic, okay.
yeah.
All right, hold on here. Time to share. Oh, I went into the wrong chapter. I'm sorry. Not,
Don't worry.
not my best day.
I'm, it's like, I so get it. I was like this yesterday.
Uh,
I wanted to go to the tutor session, but I was so fried. I couldn't even like turn the computer back on. I was like, I can't do it. I'm too tired.
well, if you went to tutoring yesterday, you would have had me for 2 hours by myself.
Oh, you did. I had
Didn't
turned everything in. I just like, all I wanted to, on the discussion question, should I ask Cornelia if I have a question on the discussion?
Yeah.
Okay.
She
All
hasn't.
right.
Normally, she turns them over to me. I'm waiting to get that phone call. About mid-semester, I usually get a phone call from Cornelia. Bob, I'm backed up here. I'm so far behind. Can you do all the correcting now for the rest of
Yeah.
the class?
Yeah. This isn't your first rodeo, huh?
No. One of the reasons I think she really put me on the faculty, besides me pestering her, is I did every little menial chore she ever asked, and I immediately did it. You know what I mean?
Wow, you are like an ace. Yeah, that's
Exactly.
awesome to have somebody like you in the bunch.
That's right. I'm her girl Friday.
Yeah.
You know what I used to do all the time? Get coffee for her.
Oh.
She'd be up in the
I love
classroom
it.
and text me downstairs. Could you get me a latte, please?
Little cup of Joe.
Yeah. Then I walk into the classroom and
That's awesome.
okay. Now I think we finally have what we need. It's what 12:12, and this won't be a long hour here by any means. Now
Okie
just give me
dokie.
1 second. Share and share. Come on. Chapter 11, right? Yeah. Do you see the PowerPoint?
I see it.
Whoa, wow, what a job getting in, huh?
Yeah.
Okay. All right, here we go. Counting for purchases and cash payments. Okay. This is something of a mirror of chapter 10 we did Wednesday, which was the purchase, which was the selling side, right?
Mm-hmm.
We sold something and we had what are called sales discounts, and we had sales returns and allowances, and they have debit balances because you never debit sales. Here,
Right.
we're going to call them purchase discounts and purchase returns and allowances, and they have credit balances because when we buy things, we're calling them purchases, and purchases is a cost. Okay.
Mm-hmm.
Purchases is a cost.
Yeah.
We're doing what's called the periodic method, which not many businesses use these days, but it really is the only way to teach the basics and get you ready for the last couple chapters here. Okay. So purchase transactions, we're buying something, huh? It can be made on account or on cash, and the procedures and documents can carry. And what we're talking about here is for resale inventory. We're not talking about a wholesaler buying 10 truckloads of Coca-Cola from the bottling company. We're talking for resale, which means these are purchases and sales from and to the end user of the product, you and me. I bought my daily soda today. That's called a resale item. That means that I pay the tax on that. Okay.
Mm-hmm.
And they're giving you documents. Remember the famous documents? Before we had in chapter 10, we started out what we called was a sales order. They call it a purchase order. The way it works in any fairly big business, Christine, is not everybody has the ability or the authority to buy something. For example, I could not go out and buy a computer on my own, but I was allowed to request it. So a purchase requisition is a form that you send to your boss, and you go, boss, I need a new computer, and he or she signs it okay. And if it's okay, then it'll go over to the purchasing department, and they'll decide what computer to buy from me. I don't buy it myself. And then the goods are, oh, I'm so sorry. What's wrong with my finger? Then the goods arrive and we get a receiving report and the invoice. And we put all these things together with our journal entry. Okay. Purchase requisition, a form use request. It can be prepared by just about anybody. And they're talking fancy in terms of 3 copies, 1 to purchasing, 1 to accounting, 1 by the department that requested. Really, you would get it signed before anything happens. You would go to your boss and say, I want to buy a computer. And he would sign the requisition, and you'd probably just walk it over to the purchasing department and separate the copies at that point if you want. And the purchase requisition, it looks something like an invoice in this case, huh? Sunflower Cycle. This employee, Emily Green, wanted to buy a couple of double tap levers and a couple of corkscrews, some fancy stuff. She is the one who filled it out. Her boss is a guy named Dan Hughes, and he approved it. And once he approved it, then it goes over to purchasing and you make the deal. One thing you really have to avoid in any kind of business, Christine, remember we were talking about internal controls the other day? How
Right.
easy it is to steal. If you want to put yourself out of business, you say to everybody, just go out and buy what you need. We trust you. No, it doesn't. Purchasing is something that needs to be centralized
Right.
under one aegis, if you know what I mean, okay?
For sure.
Purchase order. Now, the purchase order, this is the contract between the buyer and the seller. It's a written order to buy the goods. When I'm the one doing the buying, I sent you my purchase order, right? You opened up your mail and you announced, oh, we got a sales order here. Same thing as a sales order. Depends what side of the ox you're goring, okay? A written order to buy from a specific vendor. The purchase department reviews and approves it. And copies get sent around. 1 copy goes to the vendor to order the goods. 1 we're going to send to our accounting department. 1 is kept in, you have 4, 5, 6 copies lying around. The 1 to the accounting department, that's going to go to your accounts payable clerk, and he or she is going to file it probably alphabetically, and it's going to sit there, and then eventually she's going to get the invoice. And there's a purchase order, and you can't tell that from a sales order. It's the same exact thing. It's just a purchase order. But when you get this in the mail from me, you're calling it a sales order, okay? The receiving report, pretty darn important, prepared by somebody downstairs in the warehouse. He checks off how many you received of each. It could be a separate form, or it could even be a copy of the invoice and use that, which is, I don't think is a good thing to do for different reasons. But you always have a receiving report that proves the goods have come into the factory, okay, or store. And here's the invoice prepared by the seller as a bill. Seller calls it sales invoice. Buyer calls it a purchase invoice. Before payment is made, the accounting department compares the invoice with these 3 things. And remember, I was just saying that the purchase requisition ends up a copy of it, at least in accounting. So will the purchase order. And the purchase order and the purchase requisition will be sitting in a box of some kind, or a desk drawer or folder. And then the receiving report comes in, and you're going to match all of that up. You're going to match all of that up to the invoice, staple them all together. And then when the bill gets paid, a copy of the check will be stapled right on top of that pack. It's called an accounts payable package, we used to call that. And you file it away. Doing all this is a good example of exercising proper internal control. Purchase invoice. Well, here's the invoice. Here we go. Well, they ordered 3, 3, and 2 of these things, and they go out. When you multiply them out, it comes to $760. Now, I don't know how old-fashioned this is, or if they still do it, but usually you have a stamp. You just stamp the invoice. With some kind of fax. Oh, I'm so sorry. What's wrong with this thing? You stamp the invoice, and you go, okay, it was received by somebody and the items were correct. Someone actually does the extension of the arithmetic, compares it, and then off you go. Cash discounts. We called it a sales discount in the prior chapter.
Mhm.
The buyer calls it a purchase discount. Okay. Purchase discount available if you pay within the discount period. One man's sales discount is another woman's purchase discount, right?
Yep.
Trade discounts. Trade discounts you don't do anything with. But let's understand what a trade discount is. In certain industries, certain stores, they have a big catalog, right? And you can go in there and it will say, we're offering 30% off on everything in this book. That's called a trade discount. You don't record that in your financial records. In other words, it's offered by manufacturers and wholesalers, a reduction from the list or catalog price to different people. Trade discounts represent a reduction in the price, should not be entered in the accounts of either the buyer or the seller. So when you go in there, you don't say to yourself, well, I'm buying this $1,000 garment and I'm going to put down that I'm going to debit garments for 1,000. And then when the garment arrives, I'm going to give myself a $200 discount. No, you ignore that. Okay. A trade discount is just a reduction in the price. The buyer and seller both record the transaction at the net. If there is both a cash and a trade discount, it's the cash discount that we're talking about. Okay. Purchase invoice with trade discount. Where do they say this here and here? Yes. Okay. Well, this thing is acting up. Okay. You look at the bottom here, Christine. Look at the bottom here, please. And
Mhm.
let me put this on a firmer stand. I'll try not to touch it unless I have to. Okay. What they're showing you here is an example of a trade discount. You notice that the total was $760 after the 3 items, Christine?
Mhm.
And then they said less 10% discount.
Mhm.
Okay, that don't cut no ice with us. It means that
Right.
we bought this for 684 and we're going to debit equipment for 684. Okay.
Mhm. Sounds good.
Touch and release. Describe and use merchandise, purchase accounts, and compute gross profit. Okay. Now we're getting into something a little bit. Hey, look what we have. Last chapter, we had sales returns and allowances, sales discounts. This chapter, we have purchases, purchase returns and allowances, and purchase discounts. Plus, they threw freight in. Freight in. That's the cost of bringing it in on a truck or the UPS charge, perhaps, whatever it costs in dollars to bring the goods into your business. And here they're just showing you the different accounts that we're introducing you to now. So we have to remember that purchases is a cost, it's an expense, and it has a normal debit balance. And the purchase returns and the purchase discounts have a credit balance. Any freight in gets added to the price of the goods. So freight in is a cost, okay? Purchase returns, purchase discounts. Purchase account used to record the cost of goods purchased, cost of merchandise purchased. It's debited when it's purchased, and the only time you credit it is when we close it at the end of the year. Okay, like any other expense. And just like I used to say that you never debit sales, you never credit purchases, never credit purchases. You're going to use those contra accounts to do that. And here's an example of a purchase. This isn't too tough. We bought something for $100. We debit purchases and we credit accounts payable. Now, when we say purchases, please understand that it's limited to the inventory. That's what we're buying, Christine, inventory.
Right.
Under the periodic method, though, as you're going to learn shortly, under the periodic method, which we're doing here, we do not record anything except the purchase of the item. In other words, we debit purchases and we credit accounts payable. We don't go in there and worry about the cost of goods sold at any points yet, okay? So purchase example, purchase returns and allowances. Here's our contra. Contra normally has a credit balance. We credit it for the amount of the returns and allowances. And again, you don't do anything with this account until you close it. So these are your credit balances. I think another way to think about it is sales returns and allowances are bad for the seller. Obviously, it reduces his income, right? Purchase returns and allowances are good for the vendor because it reduces their cost and increases their income. Purchase returns and allowances, okay. Merchandise bought on account for $200 is defective and returned to the supplier. You debit accounts payable and you never credit purchases. You credit purchase returns and allowances. All right. And that amount, that purchase returns and allowances, it's going to be shown as a deduction for purchases on the income statement when we get there. Here's another one here. The only difference here is, what is the difference here? Assume that the same merchandise retained, but oh, okay. This is another sale, purchase returns and allowance. Assume that the same merchandise is returned. That's supposed to be returned, but the supply grants a price reduction of $45 because of defects. Well, that's not a purchase return, but we call it a purchase allowance. And purchase returns and allowance are both on the same account.
Yeah.
That's the only thing.
Yeah.
Yeah, we sold this guy a $90 toaster or something. And the guy said, his toaster's not doing a good job. I'm not getting the good crunch I need. And we say, look, we'll cut the price in half if you keep it. We don't want the darn thing back, okay? So that's pretty easy, right? You debit accounts payable and credit the contra account. Purchase discounts. We're talking the same exact thing as we did the prior chapter Wednesday. We're talking 210 net 30, 310 45, right? 2% 10 net 30. You get a 2% discount if you pay in 10 days. Net 30 means you pay the net or the total in 30 days, okay? So just like sales discounts are a contra sales account, these guys here in this chapter are contra purchases accounts. The account is credited for the discount, credited for the discount, and the account is debited during the closing process. In other words, we close it because there's a normal credit balance. Here's an example of purchase discount. Merchandise is purchased for $100 with credit terms 230, 210 net 30. Well, when we bought this, we debited merchandise and we credited accounts payable, right? We debited, I should have said merchandise, purchases, same thing. We debited purchases and we credited accounts payable. Now we paid the bill, say 5 days later. So the cash amount we're going to dole out is $98. The discount is $2. And this person has now relieved the entire $100 worth of purchases. Okay. So that's not too bad there. No. Hi, Krista. How you doing? All right, Krista's coming in here as we get going. We'll do a little review for Krista when we get done, huh, Christine? You up for that?
Sorry, busy day.
I was late getting in anyway. I had all kinds of problems with the computer.
Okay, good.
So I'll keep going here, and then I'm going to go back and go over it again in a certain format for you, okay, Krista?
Okay, sweet.
With Christine doing most of the teaching, I hope.
It's a lot.
The Socratic method, I suppose. See, what we're talking about in this chapter, Krista, is the opposite of chapter 10, which was sales returns and allowances, right?
Right.
Sales have a credit balance, so the contras accounts have a debit balance. and they're called sales returns. They're called sales discounts. In this chapter, they're purchase returns and allowances and they're purchase discounts. And what we debit is called purchases. When we buy our merchandise, we're calling it purchases. Okay. So I was just getting up to the point where we're going to look at an example with a discount tag in.
Okay, great.
Well, we purchased merchandise for $100. They're not showing that journal entry, but that journal entry would have been a debit to purchases for 100 and a credit to accounts payable. You don't worry about the discount until you actually take it or get it. So now a few days go by and this company has now paid for the goods early. So your debit is going to be to accounts payable for the entire $100. We only have to pay $98. So the $2 purchase discount sits there as a credit to balance that journal entry. Sales discounts and purchase discounts are the same thing. Sales discounts, purchase discounts, same thing. Sales returns, allowances, purchase returns, allowances, same thing. Depends what side of the business you're on. We talked a little bit about this earlier. Freight. This is the cost of trucking in the purchases, okay? We went out and we bought a truckload of garments for Nordstrom's. We work at Nordstrom's, and that truck came across the country and dropped off the goods, and the guy gave us a freight bill, and that freight bill was $1,000. That will be debited to an account called freight in expense. There's freight in, there's freight out. Freight in expense. It will be added to your purchases when you do the income statement, when we get to that. So freight in is a cost. It has a debit balance. Purchases is a cost. It has a normal debit balances. So you're going to debit freight in for the transportation charges. And of course, it's an expense that gets closed. Let's have fun talking about this. Now, if I was putting the test together, I love to put 2 or 3 FOB problems on. I happen to like it. FOB, free on board, freight on board, free on board. I always called it freight on board, and I realized that that's wrong, but people knew what I was talking about. Free on board. What do we got? What do we have going here? Okay. Free on board, free on board. I'll say it correctly. The buyer pays the transportation charges. The buyer owns the item as soon as it is shipped. Freight charges can be listed separately on the invoice, or you're going to get a separate freight bill. If it's FOB destination, the seller pays. So let me try to simplify a little bit. FOB is the exact point in time where title to the goods change hands and the buying person is responsible. So you shipped something from Santa Barbara, you shipped it right from the campus here. You have a campus store here. You shipped it to my house back in Newark, New Jersey, right? And the deal is FOB shipping point. The minute that truck driver drove off our campus and turned right, and then he had an accident in front of the 7-Eleven down the street here, I'm responsible for that because I own those goods as soon as it left the school. Do we understand that? That's when the title changed. So that truck can drive all the way across the country. And if it had an accident outside my business, I'm still responsible for it. FOB shipping point. FOB destination. Now, you want to sell it to me again. And this time you say, should we make it FOB shipping point, Bob? And I say, heck no. You remember what happened the last time? The truck crashed 2 seconds after it left your parking lot. I don't want to be responsible for that. Make it FOB destination. Okay? Now the seller is responsible for everything. That the seller pays the freight bill. It's the seller's insurance company that would get involved. The seller is in charge of everything. That truck goes across the country. And if it goes over if it takes a bad turn and flips over off the New Jersey Turnpike, then I'm not worried about it as the buyer. So FOB, shipping point, FOB, destination. Sound kind of clear? Any questions on that?
Got it.
When it changes hands. And I'm going to give you an example. This can be a strategic thing. I worked for a place where we didn't have cash to pay the employees sometimes, which is not a good situation. But what I was able to do was I could call up our raw material provider in Oklahoma, and I would say, Jerry, can you please, here's a purchase order. Can you please put a carload of resin on the railroad tracks? And then let me know when the bill of lading is signed. The reason for that, Christine and Krista, was once I had that FOB FOB shipping point secure, I owned that revenue. I owned that inventory. Say it was $1 million. I had to deal with a bank where I could borrow 80% against whatever I had in AR or inventory. So you can be strategic with the FOB. It could be FOB Chicago, halfway across the country. FOB.
Oh, okay.
Yeah. F1B, FOB, the 7-Eleven down the corner will make the trades. You get the idea.
Yeah.
And here's an example of freight in, okay? Merchandise was purchased on account for $40 plus freight. Well, we bought something, not $40, $400. Purchases is debited only for the merchandise cost, which is $400. And the freight in, they're telling you, is $38. So $438 it is. That's the bill we received from the seller. The seller said $400 and you owe me $38 in freight. We want to keep that separate from the merchandise. We have to. So the total is $438. In that example there, Christine and Krista, they're putting the freight on the invoice. They don't have to do that. Sometimes it comes like this. It's the same exact thing. If the freight charges were on a separate bill from the transportation company, you still do the same thing. You debit purchases $400, but what happened was the company that shipped it called up a freight company and said, you bill that $38 not to me, but to Bob's company. Okay. So it comes out the same. Debit to purchases for $400 and a debit to freight in for $38, and you end up with AP of $438. Now we're getting into the income statement. The income statement that you haven't seen before. When I say you haven't seen it, this is a more elongated one. This is the one you're going to be working with like crazy in 230 when you get there, but let's get started on it. Gross profit, also called gross margin, gross profit. Your income statement is going to begin with sales, and then you have minus the sales returns and allowances, the sales discounts, the credit cards, and you're going to come down to net sales. Net sales. Net sales. Net sales minus cost of goods sold equals gross margin. And we just have to know that. Gross sales, not gross sales, net sales minus COGS, cost of goods sold, equals gross margin. Okay? Now, what is cost of goods sold? This confuses students, and I'll try to make this as clear and concise as I can. Cost of goods sold is the amount of money that you paid for the item you just sold. In other words, we sold a $1,000 garment to somebody, okay? And that garment cost us $600 to buy it from the wholesaler. That $600 is your cost of goods sold. So on your financial statement, if that was the only activity, you would have net sales of 1,000. Next line would be minus cost of goods sold, which was the 600, and the difference is your gross margin. It's a way to isolate the one big expense typically in a retail environment, which is what we're trying to teach in this course here. Cost of goods sold, what did you pay for the goods? Another way to say it is cost of goods sold is an expense that stands out there by itself. It's all alone. It's not part of admin expenses, not part of selling and admin, okay? Cost of goods sold. What did we pay for this garment? That's the cost of goods sold. Wow, look at this now. Woo, doggies. Take a peek here. Compute the gross profit. Assume the following. We got sales, sales returns, sales discounts, purchases. Look at all that. Good gosh. Okay. But let's divide and conquer. What are they asking here? Compute the gross profit. Assume the following. So from looking at this, how would you compute the gross profit? Well, you can't. Actually, you can't. Oh, I have to do some teaching. Ah, they didn't put that part in. They did, this slide, by the way, is correct. Is correct. I went ahead too far. But let's look at what they're giving us. They're giving us the sales returns allowances, and the sales discounts. They might have given us the credit cards too. Well, that 201,500 minus the 1,200 for returns and the 1,000 for sales is going to give us our net sales. Okay. We know we have to subtract the cost of goods sold from that, but they're not giving it to us there. What they are giving, though, is the tools we need to compute it. Okay. So let's have some fun with this. Computation of gross profit. Net sales equals sales minus the contra accounts, right? Sales minus sales returns, sales discounts, and credit cards. This is the price charged to the customers. Cost of goods sold is computed as follows, and don't write anything down just yet. We start with this item here. Cost of goods available. Think of it this way: beginning inventory plus the goods you purchased. That's something we call goods available for sale. Goods available for sale. So let's see what we have here. We have a beginning inventory. You see that beginning inventory, January 1? That's 26,000 we had available to sell. We purchased another 105,000, so that gets us up to 131. But then we had a couple of discounts and this one ad. So cost of goods available, let's make that the easy part. That's just the total amount you could have sold during the month. You can't sell more than what you had in the beginning inventory, plus what you added it during the month. Okay? Cost of goods available. Let's understand that's the first step in coming up with the cost of goods sold. Compute the cost of goods sold. Hey, take a look. Cost of goods sold equals the goods available for sale minus the ending inventory. In other words, you had $129,500. In this example here, you had $129,500 of available. Those were the numbers they gave us over here. We had the 105 to begin with, plus minus the 800, minus the 1,000, plus the freight in, and then we added in the beginning, subtract out. So let's try to understand this. Cost of goods sold. We had 129,500 available. We went out and took a physical inventory under this periodic method that we're working with in this chapter for a while, in this book for a while. You must take a physical inventory and count what's out there. So that 129,500 at the end of the month, we either sold it or we still have it. So we went out and counted it. Krista went out there and counted it. She came back and said, we have $18,000 worth of stuff back there. Well, we had so many to begin with, plus what we purchased, which was 129.5. The difference has to be what we sold. The difference has to be what we sold. You good on that, Christine? Okay. That's what we had to have sold. So now we've got the cost of goods sold. Gross profit equals net sales minus cost of goods sold. Now, you ready to see the report? Do you want to see the statement? Okay, wow, look at that report. Look at this. We want to compute the gross profit. Look what a gross profit is. It's about 20 lines down. So what are we talking about? We're talking about sales 199 minus cost of minus cost of goods sold is 111.5 equals our ending, our gross profit. So let's go divide and conquer again. We got to do three things. We got to come up with the net sales. That's the gross sales, 201,500 minus the 1,200 in returns and allowances minus the 1,000 in sales discounts. There's our net sales. Okay. Cost of goods sold. This is the one that's a little bit trickier, but let's get the logic of it. It's not too tough. Cost of goods sold. We had a beginning inventory of 105. We returned some goods and we took a discount. So our net purchases, just like net sales, are computed the same way. We take the contra accounts, subtracted from the purchases. Now we have freight. Freight gets added to the purchases. Freight is a part of cost of goods sold. That's a part of what it costs to bring in the goods. So we got 103 here, 200. We added up, we got 103,500. That is your available, or I'm sorry, that's how much you purchased. That's how much you purchased. They're making this a little more complicated than I think it needs to be, but that's okay. So we know what the beginning inventory was. We know it was it was 26,000. We know what we purchased, 103. So the most we could have sold is 129,500, 26,000 plus the 103. That's the most we could have sold, 129,500. Krista went out and counted, said there's 18,000 left. Well, that means we sold 111,500. That's our cost of goods sold. Net sales 199,300 minus cost of goods sold equals gross profit or gross margin. Any questions? You just have to do. You have to just do this.
Practice that.
Yeah, it's a matter of two things: practicing, and of course, is the biggest. And the other is understanding, the logic of it. You have a bookstore. You have 1,000 books in the store when you opened up beginning of the month. You purchased 9,000 more books, hoping to sell them. So that's 10,000 you could have sold. Month end, you count the books left. You only have 100 books left. Well, you sold 9,900 books, right? Yeah, this is a bugaboo here. This is a little bit tricky and takes a little bit of organization. That's why I say divide and conquer. What do we need to get the profit? Go ahead, Christine. I'm sorry.
Oh, I was just going to say I have a little grocery store, one of my clients, and so I deal with this kind of stuff a lot.
I guess a grocery store would be a real classic.
Yeah.
In terms of this, yeah.
Mm-hmm.
Of course, it could be that we didn't sell 111,000. It could be somebody stole 111,000.
In this grocery store, that does happen too.
They don't let them know where I live, okay?
Right.
You ever see that great movie, My Cousin Vinny?
Oh yeah.
You seen that, right, Chris? That's clear. The two kids were charged for murder after they were accused of stealing a can of tuna fish. Anyway, I digress. That's my buddy from New Jersey, Joe Pesci. That's where I like that movie.
Hilarious.
Yeah. What about the Utes? There were two Utes, Your Honor. Okay, come on, stop babbling. Okay, we're getting toward the end here. Remember the accounts receivable ledger? You have the same thing with this. You have the accounts payable ledger. It's going to look exactly like the chart of accounts does in the general ledger. It's just going to be one folder for each of your vendors. So let's see what we have here. Accounts payable ledger, separate, contains an individual account for each supplier. It'll be numbered. It'll be filed alphabetically, I'm pretty sure. and the summary accounts maintained in the general ledger is the controlling account. So again, we talk about the difference between a controlling account and a controlling ledger, if you will, or a subsidiary ledger. Control, no real detail. The auditors can go in there and they look at your accounts payable and they say, okay, I see you have $1 million in accounts payable. Who owes you that money? Well, you go to the subsidiary ledger to get that, because that's going to be the detail. So here we go. Let's see what we have here. We have purchases during the month of April. Purchase material, net 30, net 30. One of these is 1%. I'm just looking at them real quick to see if they're all the same. Yeah, they're pretty much all the same, except a couple of them have discount. Let's see if that comes into play now. April 4, purchase merchandise from Belenky Cycle Works, $3,300. Well, here's our journal entries. What do you notice about the journal entries on all of these? They're all the same. They're all the same. We don't care about the discount at the point of the purchase or the point of the sale, because from the selling side, we don't know if the vendor is going to take the discount, and even the buyer doesn't necessarily know. It would depend on a lot of things. So look at your journal entries. You debit purchases, you credit accounts payable. That's all there is to it. That's all there is to it. That's the reciprocal of debiting accounts receivable and crediting sales, right? Posting purchases to the general ledger. This class is now a bunch of experts in doing this. Experts. So let's take a look. There's your general journal. Can you see the numbers, both of you? I don't.
My computer's huge.
Oh, okay, good to hear. There we go. I'm the one that has trouble. Yeah. General journal. There's our journal entries. And we're going to accounts payable. And we take that credit from accounts payable and we put it there. And we put the debit to purchases here. We know how to do that, right? Now we have to put them into the other ledger, the subsidiary ledger. This is accounts payable. The only thing you see here is a balance of $10,600. You see a couple of purchases. You see a prior balance. That doesn't tell us anything. That's just general. That's why it's called the general ledger. Accounts payable ledger. Same thing. Enter the date, the amount, the new balance. There might be a reference number you want to use. And you can put a slash in followed by a check mark or whatever you want in the post reference column. So let's take a shot here. Won't even look at the general ledger. So here we go. We had purchase of $3,300. We credited accounts payable over here. And now we're bringing it over to the person who sold it to us, Belenky Cycle Works. They told you that in the journal entry, which may or may not happen. Same thing with the $2,500. You bring it over to the account. So far we have $3,300 plus $2,500. If we look at the accounts payable, they don't tell us what this $4,800 is. That was the beginning balance, okay? So now that we've posted everything to the subsidiary, and notice on the posting reference, they use J6. J6, they don't have it here, huh? There it is, page 6. That's where they got that. Journal entry, page 6. That's called the trail. So the vendor, the auditor can come in, look at the general ledger, pick out who's 3,300, and go from there. Posting purchase returns. Okay, well, we know how to do sales returns. We debited sales returns and allowances, right? And we credited accounts receivable. Here, it's the opposite. We are going to credit purchase returns and allowances and debit accounts payable. So let's see what we have. Sunflower Cycle returned $200 from an April 23rd purchase. The $200 debit is posted to the accounts payable account and then to the subsidiary. Yeah, that's what we were just doing. Let's see. Here we go. Look at your journal entry. They returned goods. We never debit sales. We never credit purchases. That's the part of the class you missed, Krista. We never credit purchases.
Never credit purchases. Got it.
Never. So what we do credit, though, are the contra accounts, the contra cost accounts. Purchase returns allowances. We credit that. Okay. That reduced our cost because we returned these goods. It means we no longer owe $200. We post it to the general ledger as normal. We bring over the 200 here to the general ledger. We bring it down here in the purchase returns and allowance area. But more importantly, for this slide here, look what we're doing. 200, that's going to show up on the debit side. It looks like a payment. It's really not a payment, but it is a reduction in the amount that this vendor owes us, that this vendor owes us, okay? Posting cash payments. Cash payments, now we're getting back in the world of cash discounts, huh? Except now we're calling them purchase discounts. To the seller, it's a sales discount. To the purchaser, it's a purchase discount, huh? Assume Sunflower Cycle made the following two payments on account during the month of April. They paid ACE $4,800, and then they paid Gunnar Cycles $8,700 less a discount of 1%. So you can, there we go. I'm sure you can see that. I'm just clearing it for my purposes. So there we go. That's what it looks like on the general ledger. There is your journal entry, the journal entry. And here we go again. Here we go again. Both entries are the same. We debit accounts payable because we do not have to pay for what was sent back, or we debit accounts payable because we took a discount or there was a return. So let's look at the first one. Ace Wheel Works. Looks like they paid us. Remember that $4,800 we had? Hey, they paid us. Whoopee. So that's cash. And that cash is going to go right down over to here. $4,800 cash. And the $4,800 is going to be debited out of accounts payable. And we have to bring the activity over to the ledger. Ace Wheelworks has its own ledger. It is in the subsidiary ledger, general ledger's detail. And here we have a payment made where the guy took a discount, I believe, right? Yeah, look at this. Looks like the guy had a 1% discount. So he doesn't owe us $8,700 anymore. That $8,700 you see sitting here in accounts payable, he satisfied us by paying us $8,600 in cash. $8,600, where's that? Oh, I'm sorry. I did the arithmetic wrong in my head. I was looking for a different number. My bad. Yeah, $8,700 is what's coming out of accounts payable. The 1% discount is $87. $87 from $8,700 is $8,613. Let me do that one again because that was all screwed up. Accounts payable. You debit it because the guy's paying us off. He took an $87 discount, which you're going to be showing in the detail under an account called purchase discount. You credit purchase discount, and that leaves $8,613 in cash. And you, whatever you do to accounts payable, you do here. 8,700 reduced it, okay? So at this point, we have a balance in accounts payable of 11,900. But it does not include this 4,800 or this 8,700. We know that right now. Oof. And then we do our famous schedule. Our schedule. We're simply going to take the balance of the subsidiary accounts and drop them in here. We're good with this, right, Christine? Yeah, this shouldn't be too tough. It's simply the balance of what you have in your subsidiary. You're showing the detail. And we're not going to, boy, they got a lot on. We're not going over the appendix in this class. We do not have to get our appendix out, okay?
Yay.
Just remember that. It's an old joke. Hey, Christine, you ready for a 5-minute catch up here? For Krista?
Yeah. Oh, Krista?
You ready?
Sure. I think I got it.
Yeah. Yeah, I think you did too. I'll just take you real quick. Oh, yeah, we were talking about the forms, right, Christine?
Yep.
That's Dullsville. Wouldn't you agree?
Yeah.
Receiving report. Cash discount. On this side, we call it a cash discount. The other side calls it a sales discount.
Got it.
Let's talk about trade discounts real quick. We'll be out of here in just a few minutes. Why don't you talk about what a trade discount is, Christine? You want to do that?
You're on.
Oh, no. A trade discount is taken. I'm all discombobulated because I just spilled an entire glass of water on my desk. That's why.
Geez. All right, I'll step in, Christine. That's an old trick I used to use in grammar school. I'd spill my milk. No, yeah, I'll step in. A trade
Thank you.
discount is this: certain customers always get an automatic break. It could be in a catalog. For example, you want to order an item, and in the catalog, Krista, it says it's $1,000 each, but then it has a note below it, 20% off. Well, you don't record that 20% discount.
Right.
That just means you're paying
Right.
$800 for it. Okay, Krista?
You just take it off the top.
Yes, you ignore it. It has nothing to do with you. You say to yourself, well, it's nice I'm getting a 20% discount, but I'm actually paying $800 for it for my purposes.
Right.
Okay.
So that's not recorded.
No, it's not. No, and that's a key. And again, that's a question that pops up on the test.
Okay.
When I'm making up my test, and I do make them, I go through every one of these slides and I pick out 2 or 3 things and eventually cull it down to it. And then we talked again about the whatchamacallits, the forms. And then it's about where you popped in here. We were just getting into the
Okay.
purchase.
Yeah, I was right there. Yeah.
Okay. So I guess
Okay,
we're okay.
yeah.
Any questions, anybody?
For me, it's just a matter of putting all the numbers in and
Yep.
knowing what goes where just by practice.
Yep.
Me
yep.
too.
I've never done any of this. I just put it into QuickBooks and QuickBooks does everything.
Yeah.
And so doing it this way is completely new to me. So it's just a matter of memorizing by repetition where each of the numbers go.
Yeah,
I
exactly.
understand
right.
the concept though.
Yeah, you're behind the scenes now,
Yeah.
Yeah.
So take a look
homework,
at. Go ahead.
the homework really gets
Yeah.
it in your head, huh? I mean, it's like really sometimes frustrating, but after doing it a little bit, it really does help.
Yeah,
Yeah,
it does. And it helps that you can check your work so that you know
Yeah.
if you're doing it right. which
Like you're
is
on the
super
right
cool.
path.
Yeah.
Yeah, well, we got plenty of resources for you.
Yeah.
Just look at that page. I would maybe print this out and have it available all the time. Because
Right.
on the test, you're going to be given that information. You're going to be given that itemized list of numbers we saw. And then the
Mhm.
question might be, what were the purchases? They
Right.
might give you everything on here except the purchases.
Got it. Now,
Yeah, it's on page 409 in our book.
Okay.
Yeah.
so how do I print it out though? I can photocopy, I bought the book or rented the book, so I could photocopy it, but how do I print it from the online book? I couldn't figure out how to do that.
You can go into this PowerPoint. All these PowerPoints are available to you in the module. You just print this slide out.
Oh, I didn't think about looking at the slides. Okay,
Yeah, that'd be my
the
way to do
PowerPoint
it.
slides. Okay.
Yeah.
I wonder if you could take a screenshot or something.
Yeah, you
Yeah,
can do
I was
that.
thinking you could take a screenshot, but my screenshot function's not working and it hasn't for a while. So, but
I
I
don't-
could look at the PowerPoint slides and then just print it from there.
Yeah, that's the easiest way I know.
And
Or
then
take a
Christine,
picture with your phone.
yeah.
I've done
Christine, you
that.
had mentioned printing the quiz
Yeah.
as a PDF. How do you do that? I couldn't do that either.
Well, okay. Do you have a Mac? Or
I have
do
a
you
Mac.
Okay. So,
Uh-huh.
like my Mac, like I just got mine, so I'm still trying to figure it out. But from what I figured out, like when I hit print, because my printer is old, it just gives me the option print as a PDF. So I hit
Ah,
print and it says print as a PDF. I'm all okay. So then I
Okay.
save it.
I'll
and
look
then
for that setting when because I do print them. This
Mhm.
is so helpful to
It
go
is very
back.
helpful. Mhm.
Oh my gosh.
Yeah, like crazy. Now that
Yeah.
we've done the midterm, we can really see how helpful it is.
Yeah, I know. It's super helpful.
Yeah.
So
You
I'll
both-
try printing it as a PDF.
Yeah, that's
I
how.
appreciate you helping each other. We're more than halfway through this class. Hard to believe, huh?
God, no, I know. I
It's
can't
gone
believe-
so fast.
Yes.
Yeah, it's gone. You know, Krista, how did you determine, like, did you look at the discussion question for the 10 and 11?
No,
Well, I just looked at it
It-
because I try and do it so I don't have to do it on
I
Sunday.
hate those discussion questions.
I hate them
actually.
too.
I hate them.
You have to
I
do
And
them
I
on.
submit
What do
them
you
and
mean?
I realize I'm totally off base on something,
Oh,
but
I
you
just
can
don't
edit
like
them. Did you know that?
criticizing.
You can
Is that
edit them.
something you do online? Those discussion questions is part of your,
Yes.
Yes.
I'm
Yeah.
not even familiar with that.
Oh my
Oh, it
gosh.
sucks.
It does. It's the worst. You know what? I'm just not good. I don't like criticizing other people and like,
Right.
Oh,
You
you mean
know.
the discussions with other students, right?
yeah,
Oh,
And
yeah.
you can't see it until you post yours.
right. So I don't,
And then like, yeah,
you don't even know if you're on the right track, right?
right.
Yeah.
But
so-
although I realized you can edit them,
yeah, thank heavens. That's a good idea. Just put something weird out
put
there.
something down and then edit the heck out of it.
Yeah.
Yeah, I know, I understand what you're talking about.
You
Yeah,
can put in, I have no effing idea.
Me
Yeah.
too.
Submit.
I'm right there with you, lady.
yeah, everybody's self-conscious about going out there at first. And then after people have gone out at first, they pretty much covered everything. And then it's
Right.
hard to
Yeah.
make more comments, you know?
Yeah. And then trying to like, some people are so like, they've done it so thoroughly. I'm like, well, what am I going to criticize? There's nothing I can critique on here.
Yeah, no, I'm kind of chuckling. Yeah, you don't want to just say, I agree with Krista, or I agree with Christine, you know?
Right. Yeah. That would be like, what do you want to say?
Yeah, I've seen comments that say, thank you, Walter. That was good information. It's going to help me a lot. Not very
Yeah.
insightful. Well, okay. I'll let you worry about the discussions. I can't help with that.
No. Okay. Well,
That's a
I'm-
Quinelli thing. And
I-
she's the one who is still grading everything. She's grading the summaries right now. And
oh,
I don't think she's gone back to grade your test. Now I know you both got real good marks on the test, but I still need to go through it because you probably have another point or two coming, whether you realize it or not. But
Yes.
only I can dig that out.
Okay.
So,
ah.
Christine, is
Yeah.
there a way that I could like text you or
Oh my gosh. Yes. Anytime.
what is your phone number?
yeah,
It's-
yeah. But,
Although
yes,
this is recorded, I don't know if you want to record it.
that's
Oh,
okay.
yeah. That's
Yeah,
right.
I'm glad you mentioned that, Krista. Hello, everybody out in the class world. I'm going to give my text number now. You ready? 805-452-4883. That doesn't mean I'll be
Okay.
able to get right back to you immediately, but you know,
No, but Thank you,
But that's
Bob.
the best way
awesome.
to get a hold of me. And the other thing is, some of the students are complaining they're having trouble finding these lectures. The easy way to go, if you're not finding it in Canvas, is go to